Ideally, if you could just go out and buy 10 properties at 300 grand, that would get you $3 million worth of asset, but then how do you pay down that debt? One could be a debt consolidation in the future where you use the profits of the rents to pay out the mortgages, which is what I'm doing with my personal portfolio. I've held on for so long. The debts are really nothing, the expenses are really nothing, but the cash flow coming through every week, every month is paying down that debt. If you go back to 1990, you will see that you could retire on $500,000 in cash or $500,000 worth of asset. But the problem is that the cost of money has been reduced so much. It's very easy and very cheap to get money out there, and that has caused lots of inflation over the last 3 decades since 1990. And $500,000 won't get you too far. It would be a half deposit, or be a deposit for a property in Sydney or something like that. So if we go back, 30 years ago, what would $500,000, if you put $500,000 into the bank and you would have got a 10% return on that, 10% return on $500,000 would have been 50 grand a year. 50 grand a year would have been like having $150,000 in 2022. So the money buys you less, the returns are diminished. Like if you put $500,000 in the bank today at 0.5%, you're going to be getting $2,500 per year, and that's not going to buy you anything now. So cash is trash, understand that. Paying out debt is really irrelevant. And looking at the power of having assets. Doesn't matter whether it's shares, doesn't matter if it's property, doesn't matter what it was, doesn't matter if it's old beat up Datsun 1600s. They've all gone up with inflation. So the worst investment to have held on to for 30 years would have been having cash. The best investment would have been anything else apart from cash. But something greater than having something that's apart from cash is having something that's got a cash flow that gets inflated away as well.